Hello traders, Gary Wagner here, approximately 1:45 in Honolulu, 6:45 in New York. It is Wednesday, the 24th day of February 2021, and this is the daily report for gold and silver. We saw the entire precious metals complex see nice gains with the exception of gold today. And the topic that we really want to focus on is our upside target in platinum. Of course, we narrowly missed getting stopped out yesterday when platinum traded to an intraday low of 1218. Our stop was at 17. That's the perfect example of when a stop does work. Doesn't always work, but in this case, we were fortunate. Let's take a look at our charts as well as the price board. With the exception of gold, all of the precious metals traded on the futures complex did close higher on the day. Gold closed fractionally lower, but it did hit a intraday low in trading of 1782.20 before moving back above $1,800 an ounce. And as I said, closing at 1804. This, of course, bases the most active April contract. This first chart is a daily candlestick chart of gold. We have a short-term Fibonacci retracement that begins when gold was trading to that low of $1,766. And then we talked about the fact that we saw basically a double bottom form with these most recent lows that came in, especially what we saw last week when the market traded to a low of 1760 and a lower low than this previous low here. We did an interview with David Lynn of Kitco News yesterday in which I spoke frankly and honestly of how I perceive gold through the eyes of a market technician. And there's no question when you look at the data and the fact that we had this death cross come in, and this, of course, is between the 50-day, the shortest of our moving averages, and the 200-day right here, that signals that we could see prices move lower. We, in fact, did because that matches this candle here. And over the last couple of trading days, we have challenged on 3 occasions this one area at 1809, which represents a 78% retracement of this data set. And as I said, it's a fairly short data set, 1766 up to about 1962. We had that tremendous spike just on Monday, yesterday's short decline, and today a fractional decline. But nonetheless, you can see that on each of the last 3 trading days, they were unsuccessful in making a new high hold on a closing basis. They're both red candles, meaning they closed below the opening price. And today, genuinely, we saw a lower low than we did yesterday. So it tells me that we're under pressure. The other thing that I'm looking at is whether or not we see a convergence or divergence between the 50 and the 200-day moving average. And they are certainly moving apart, as that is an indication of continued weakness in the market. In terms of various levels that I'm looking at, 1810, that's got to be our first level that we would look at as a resistance area that must be broken. We've got a major area at around 1850, and 1841 is also important here. The numbers of about 1850 come in really from the 50-day moving average up to 1865. That is the 100-day moving average. And it does appear as though the 100-day wants to cross now below the 200-day, and that would be exceedingly bearish. You can see that the relationship between these two moving averages are coming closer together, and that's more of a technical indication that we are seeing gold trade under pressure, and we could see either sideways trading or lower pricing ahead. Silver, as well as its derivative, the ETF SLV, did quite nice today with the most active March contract of silver futures gaining almost 32 cents and closing just above $28 per ounce. Net gain of 1.14%. When we look at SLV, that had a gain of about 0.9%, and that is currently fixed at $25.94. Of course, we are long both SLV as well as silver futures and spot Forex silver. We're looking at a daily chart of March silver. It is currently tracking at $28.005, so just below that. You can see that the close in New York came in at around $27.86, rounding it up, but it clearly still demonstrates that there could very well be some resistance at 28.03. So we want to see an effective close above 28.03. Of course, today's high came in at 28.12, so it did move above that. However, it was unable to close above it as it did on Monday. So my sense is that we have consolidated. We are starting to see this clip up. What I am waiting for is an effective close above, call it 28.05. The other thing that is noteworthy is it is the opposite of what we are seeing in gold in terms of our moving averages. First of all, we have the proper order, our 200-day, our 100-day, and then our 50-day. So that's in perfect bullish alignment. And then it's also very important to see whether or not those moving averages are moving further away, widening the gap, or narrowing. In this case, it's widening. That's also bullish. Lastly, I do want to convert this daily candlestick chart into what's called a average chart, or Japanese average, which is simply called a Henkin Ashi, and that will really give us an idea of strength of trend. We can see that over the last couple of days it has been diminishing because we had an absence of tail here on Monday. We did have tails that occurred both yesterday and today. This could be a pivotal candle, but I believe in this particular case it is consolidation. So we want to maintain our long position in silver futures, Forex, as well as our two legs of SLV. Palladium futures had the greatest gain today, 4.79%, about $112 to the plus side. It remains king of the hill, being the highest value precious metal traded on the futures exchange, and is currently at $2,447. But it was really platinum that surprised me the most, because that hit an intraday low in trading yesterday of $1,218. We are long platinum at 82, but we have a stop at 1217. This is a case where stop was able to protect us from that intraday volatility and keep us long while still having a protective stop in case the market would have drifted lower. We have platinum up $35.70 at $1275.40. Traders, the last chart that we are going to look at on today's show is a daily chart, that of platinum futures. First of all, as I pointed out, we had that intraday low that came in $1 above our stop, but it did recover and we are trading higher on the day. And although we've talked about where we placed our stop, we haven't really gone into any kind of detail of what my upside target is, and that's what I want to kind of go through with you right now. I am looking for platinum futures to trade anywhere between, call it 1,360 up to about 1,390. That would be the conclusion of a fifth wave in terms of our Elliott wave count, and that would give us substantial profits if we're able to achieve that. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.